María Allier, gestora de renta fija de Carmignac. Good morning.
Good morning.
What do you think when you see the whole year, this 2023, and recap the bond markets this year? What's your opinion?
Well, for sure, the bond market didn't move exactly as we hoped for and as we expected. In fact, after 2022, when the year was so bad for fixed income, the idea was that growth will decelerate, inflation will come down, and so central banks will stop hiking rates, which was absolutely not the case. And we had till yesterday, central banks hiking rates. So since March 15, yields market was up everywhere in the developing market. For example, if you look at the Bund market, the German bonds, the 10 years rise by since the beginning of the year by 20 basis points around, and the 2 years by more than 60 basis points. So it's a huge increase in yields that we still had in 2023.
And in this context, what's your outlook for the inflation in this moment?
The idea was that inflation was partly due to energy crisis, and so once the COVID reopening and so on will have their full impact, then inflation will go down. And furthermore, as the central banks hikes rates, the growth should decelerate and will help inflation coming down. That was the idea. Now. What we look at inflation, we have two things to think about. The short-term inflation, probably we are right. We will see disinflation. We are seeing disinflation in the developing market. We are seeing, months after months, inflation, core inflation coming down. So we expect, the inflation going back to target of the ECB and the Fed around 2% in, let's say, 1 or 1.5 years. But on top of that, you have the structural inflation, which is not the tactical one. And on that one, we think that we will have higher inflation in the next 10 years than what we had during the past 20 years. You have demographic, you have the green transition, you have, the geopolitical play, with re-ensuring. So all these forces will push probably for the next decade inflation a bit higher than what we had in the past 20 years, and higher means also more volatile. So short-term disinflation, longer-term higher inflation.
But the problem is central banks. What do you think about the difference between Federal Reserve and European Central Bank?
Well, both are on the same page in the sense that what they are saying is all about inflation. It's all about, pushing back inflation back to their target. The central banks is maybe a bit more difficult because the economy is responding less rapidly to the hike in yield. We saw that, you have a resilience in the US economy. Remember, 1 year ago, everybody was expecting a recession end of, the second quarter of 2024 or the second part of 2023, excuse me. Now people are even say maybe we won't have any recession. We will just have a soft landing. So the US resilience of the growth may, push the Fed a bit more on alert on rates. In Europe, it's a bit different. We already saw some country in recession, Germany. Even in country where we are not at recession, growth is very, very low. We will have a zero growth, so zero could be minus something or plus something in 2024 or beginning of 2024. So for the ECB, it's probably more difficult because you still have some inflation, but growth is no more there. So it will be very painful to hike rates even more.
Why invest in short-term bond products in this moment?
They are very, appealing for sure, because you can have without any No, I don't want to say without risk, but let's say you know, for example, if you buy letras today, you have something around 3.7% or even a bit more. So it seems very appealing. The risk of that is that the risk of that is if you don't think about the reinvestment risk, if you just buy this and you don't think that in 1 year, if inflation is going down, if growth is not there, then you know the central banks will have who have pushed rates down, you will face a reinvestment risk. That's why we still like, you know, to have a bit of duration and not to be sticky on very short-term instrument, because we need to think about, you know, the next step and not just what we have today.
And what do you think about the opportunities that the investor could have in the peripheral funds?
Well, we like them, even if a lot of people are saying, you know, maybe with the end of the asset purchases by ECB, peripheral are at risk. We are really thinking that for some of them, valuation is very good. For example, if you look at the short-term rates for well, short-term, I mean 2 to 3 years for Italian bonds or Spanish bonds, we think that the valuation is very good and deserve that we invest in. And from some other that may look very rich, like Greece, for example, we have technical reason to like them. Greece will probably regain an investment grade rating. It will be in the indices in the next, let's say, 12 months. And then we will have a lot of passive buyer like ETF, passive benchmark funds that will buy Greece. So we still like them on the short part of the curve more than on the very long part, because we think valuation and technicals are still good for these countries.
Opportunities in credit, because there are a delinquency rate going up.
Well, you know, when you look at the credit, it's not absolutely not the most expensive asset. For example, if you think that delinquencies will increase, why are equity so high? So the yield of the spread of corporate bonds already increased quite a lot. It's more than double since the beginning of 2022. So it's a huge, you know, increase in spread that we have. Second, we will have default rates for sure. We didn't have any in 2020 and very few in 2021, so we will have a default, and it's a good thing. We need some default, you know, to be sure that the economy is running correctly and that bad companies just stop producing and good companies can gain market share. So it's a good thing in the market. It will, you know, require more alpha, probably to choose the good sector, the sector that are not, you know, dependent on very low yield, the sector that know how to deal with higher yield. And for sure, when you think about financial, for example, they have still very high spread, very good return for a sector that could benefit from higher yields and know how to deal with default. They can raise provision. Provision are still quite low in the banking sector. So we really think that credit is still a good place to put your money, but you need to be very, you know, more than ever, you need alpha rather than just beta on the market.
Thank you very much, Mariana Allier, gestora de renta fija de Carmignac. Good day, good business.
Good day. Thank you. Bye.